The following episode is for general information purposes only, not investment advice. Investments in physical bullion products are not regulated by the Financial Conduct Authority and are not covered by the Financial Services Compensation Scheme or the Financial Ombudsman Service. The value of your investment can go down as well as up. Past performance is not indicative of future results. Hello and welcome to this episode of Uncirculated by the Royal Mint. My name's Toby Osborne. I work as part of our private wealth team at the Royal Mint. And today we hope to help you answer the question, why invest in gold bullion? And here to talk to me about just that is our private wealth consultant, Stuart O'Reilly. Stuart, with all of your analysis of the precious metals market as part of all of your insights work, let's discuss the strategic case for gold. We hear a lot about gold as a store of value, but why is that any different to having cash?
So obviously if you have cash, you could put it under the mattress, say, you could put it into a jar and kind of sit on that level of cash for 10, 20, 30 years. And I guess the value of that cash is the same into the nominal value, the face value of that cash. If you put £100 away, you're going to have £100 in 10 years' time. But what that will buy decreases over time because of inflation. And when we hear about inflation falling, that just means it's not getting as bad as it was previously in terms of eroding the value of that cash. So lots of people like to invest, and sometimes people put money in a cash ISA, for example. And there also you get an interest rate and you get paid interest, but quite often that interest rate is below the rate of inflation. So the value of the cash that you're putting into that cash ISA is still being eroded by inflation, just not as bad as kind of keeping it under the mattress or in a jar. And then the other option that lots of people like to look at that's similar to cash in many ways, in many people's eyes, is premium bonds. Mm-hmm. So that is it's a capital guaranteed product. So the government basically sit behind that and say, you won't lose any money. And the way that works is you'll get, every now and then, a prize. You get entered into a prize draw, you might win a prize. Could be a huge amount of money, could be not very much. And that's a monthly draw. But if you work that out over the long term, it doesn't always look that attractive in terms of comparing it to inflation, looking at interest rates and looking at investment products. And one of those is gold, as you said. And gold doesn't pay interest, but it does tend to grow year on year in terms of the value. So obviously you're not going to get the value out of it until you come to sell it. But what we've seen is over the last 10 years, gold has actually grown on average about 16% a year. Now, obviously, that's if you smooth out some of the peaks and the troughs, and that's the average over that 10-year period. But 16% year on year is much better than most of the interest rates on kind of cash ISAs that you'll have seen out there, and obviously much higher than the average rate of inflation over that time frame as well.
Yeah, without going into too many details about the geopolitical and economic factors that impact the gold price directly, it is seen, though, as more historically as an excellent portfolio diversifier as well. Yeah,
absolutely. So historically, gold has tended to behave very differently to stocks and shares. So lots of people invest in stocks and shares, often in those kind of big indices that might track the whole of the market, for example. And what happens when you get a shock in the market and those equities take a bit of a tumble is gold tends to go the other way. And there's lots of examples of that over the past 10, 20, 30, however long you want to look. One of those is Brexit. So when the UK voted to leave the European Union, that took the markets by a bit of a surprise. And as a result, the value of the kind of global stock market, equities, stocks and shares generally, tumbled, and gold went the other way. And the same is true when we saw the tariff confusion last year, for example. Equities tumbled on the confusion in the market. We didn't know the impact that would have on businesses, and gold shot up the other way. And in both those instances, gold actually outperformed US Treasuries in terms of the value increase in that time frame. And US Treasuries are important because they're also seen as a bit of a safe haven asset, something that people put their money in as a diversifier, as a bit of a safe haven to kind of hedge against what they've got in the stock market. So it's really important to diversify a portfolio so that you're not just reliant on one particular asset class and that you can weather those storms, because there will be times when stocks and shares will take a tumble. There'll be times when gold takes a tumble. So it's important not to have all of your eggs in one basket. And the other important thing in that aspect about gold is that while it's negatively correlated to stocks and shares when the equities markets tumble, it tends to be positively correlated to stocks and shares when stocks and shares have a big, significant rise in the market. So it's a great way of hedging a portfolio and smoothing out some of the volatility in an investment portfolio without weighing too much on returns when the market's doing really well.
Yeah, and in recent years, gold has come to the fore, certainly across the Royal Mint's investment platforms. And a lot of the questions that customers and clients and investors say to us revolve around the liquidity of gold. They're concerned that maybe when they make their purchase, whether it's in physical gold coins or bars, or whether it's through DigiGold or any one of the products across our investment portfolio, they're worried it might be hard to sell when that time comes, when they're happy with their returns or there's a life circumstance that means they want to make that cash available to them. Is it true that it's difficult to sell off?
No, I don't think so. And that's something we do hear quite a lot, is customers asking us, how do I sell it? How do I get the money out of it when I need it? Look, in terms of the global market, last year, so 2025, on average, every day, there was about $373 billion of gold being traded every day throughout the year. If you compare that to something like UK government bonds, UK gilts, that was about $50 billion a day. So it is a huge and liquid market globally. Now, admittedly, some of that is to do with institutional trading, markets that ordinary people don't necessarily have that direct access to. But gold has this 6,000-year history, at least, as currency. And it has been highly valued by societies and civilizations all across the world in every time period. You know, people who'd never encountered each other, civilizations that had never dreamed that other civilizations existed, still valued gold in the same way. So it's got this appeal that has lasted throughout the ages, which helps make it a really deep and liquid market. People want to buy it and always have done. And if you were looking at selling gold today, for example, you could go to a jeweler, you could go to a pawnbroker, you could go to a bullion dealer, you could come to the Royal Mint and sell it directly to us. We'll buy back gold bullion, whether we've made it or somebody else has produced it historically. We will buy that back from you according to live market rates. And it's really easy to sell it back. If you think of some other asset classes, if you're looking to sell art, for example, you probably want to get an expert opinion about that piece of art to check that it's genuine before you buy it. Mm-hmm. And that will go for a dealer and it will go for anybody else who wants to buy that piece of art. Gold's really simple. You can just assay it. The equipment to assay gold is pretty common in jewelers, in pawnbrokers, in bullion dealers across the world. It's really straightforward, really simple, easy to authenticate. And actually, what the Royal Mint's trying to do in the last few years is to reduce the need even for that assay test. It's always useful to do that. But we've introduced security features onto our Britannia and sovereign gold coins. And what that means is that without relying on any technology, you should be able to pick up a coin, see the security features on that coin, know that they're really difficult to replicate, and therefore that bullion can only have come from the Royal Mint. And that helps authenticate the product, helps smooth that transaction and make it much more liquid.
There we go. And you touched on it just there. Gold is a non-yielding asset itself. Do we find that puts investors off? Obviously, earlier on this year, at the time of the recording of this podcast, gold exceeded $5,000 per ounce for the very first time. But does the fact that it's not paying that return on a regular basis ever put investors off when they come to the Royal Mint?
I think on a surface level, it certainly can do. But I think investors should probably look a little bit deeper and look at the long-term history of gold and understand the role of gold in a portfolio. You're right, it doesn't pay an income, it doesn't pay a yield, but its growth has been pretty good compared to other asset classes. If you look at the major indices and the growth over the past 10, 15, 20 years, gold has absolutely kept up with the best of them. 16% growth on average, compound annual growth rate over the last 10 years. Gold grew 67% in 2025, admittedly an extraordinary year, but you don't get that kind of return for many asset classes. Silver actually was up 150% almost in 2025. So definitely gold can be a source of returns.
Yeah, and certainly in the UK, for UK taxpayers, there's huge tax advantages for owning gold in certain ways. Can Can you talk us through those without having to go into too many details, but certainly for gold coins, that's a big factor, isn't it?
For gold coins, definitely. I mean, it depends how you hold the gold. So you can hold gold in a tax-efficient wrapper. So you can hold gold ETFs, so buying gold on the stock market. You can hold that in an ISA. You can hold it in a private pension. And that wrapper itself gives you that tax efficiency. But it's not the gold that gives you tax efficiency, it's the wrapper. Yeah. And you can only hold certain forms of gold in those wrappers. If you were to buy gold coins, you can't hold gold coins in your ISA, for example. But the advantage that they have is that they are capital gains tax exempt in their own right. And that's because they're legal tender. So if you buy any gold coin produced by the Royal Mint in recent years, certainly, anything that's UK legal tender, that will be capital gains tax exempt because it is legal tender. And the bit more detail is basically anything that was produced after 1837, that is still classed as legal tender. So there's some coins that have been demonetised. We won't go into too much detail about that. But anything we've bought in the last anything we've produced, in the last 10 or 20 years, will be capital gains tax exempt.
And we'll remember that.
1837.
Yeah, absolutely. Yeah. You touched on it nicely when you referred to art, antiques, comparing it to these other asset classes that are maybe slightly more complex to understand, or there's different permutations within the market. Gold, comparatively, is pretty straightforward to understand once you've found an investment solution that maybe matches your life circumstance.
Yeah, definitely. Look, there are different designs on gold coins that you may be able to command a different price for when you come to sell it. Some people will want a particular design, either because they're collecting or they just really want that particular design or that theme. Or if you're selling a set of coins, for example, you might be able to command a higher price because you've curated that set. But by and large, you're buying and selling just for the metal content alone. So an ounce of gold, regardless of what design is on it, will always be worth at least an ounce of gold. You can get that little bit extra, but it's at least worth the ounce of gold. And you don't have to maintain gold in the same way. Gold is just an element that's inert. It doesn't react to anything. It doesn't corrode. It doesn't change in any way. It doesn't tarnish. You can bury a gold coin for thousands of years, dig it back up, probably just a bit of water. You might want to get the mud off it, but then it'll be good as new. It will shine like it did the day it was produced. So it doesn't require any maintenance. If you think about some of the other things that you might invest in, that's in that kind of alternative investing, passion assets kind of space, some of those require some really detailed and specialist maintenance. So classic cars, for example, or antique clocks or watches. If you don't perform regular maintenance on those, the value of what you own is going to be eroded by the fact that that product is essentially degrading. Gold doesn't do that, so it doesn't have to be maintained over time. And that's really important if you're thinking of passing gold coins on to the next generation, for example. So people who are getting older can happily enjoy their gold coin collection, and they don't have to worry about maintaining it, so that they don't have to commit to any resource or any effort later in life when they don't know their circumstances, and it can be passed on to the next generation as good as the day it was purchased.
I was going to say, but I thought you were going to finish there. Don't bury it in the garden is the overall message.
I mean, people do. Vikings buried gold coins in the ground, didn't they? And we dig those up. Yeah, definitely. Storage is really important, obviously. Probably don't go around telling everybody you've got loads of gold coins in your house. Probably don't have them on display as you open the door for anybody to see. But yeah, you can store an awful lot of value in a very small space when it comes to gold coins. So whether that's safety deposit box, whether it's in the house, or whether it's stored somebody like the Royal Mint, where we can kind of take care of everything from insurance to 24/7 security, the choice is obviously up to the investor.
More on that and our vaulting solutions in another episode for sure. Stu, thank you very much. That was very insightful as ever. Of course, for more information on any one of the topics that Stu has discussed there for the strategic case for gold, you can get in touch with our private wealth team at the Royal Mint. They'll talk to you in even more detail. And of course, there is the market news section of our website as well to visit. Many articles from Stu and other industry experts from the Royal Mint as well. That's royalmint.com. Thank you for joining us, though, on this episode of Uncirculated by the Royal Mint.